Hey guys, how's it going? It's Philip at Trade Genius. All right, we're going to dive into the charts on Bitcoin in this video and take a look at the price action since our Bitcoin halving has taken place, and take a look at some different things like how the S&P 500 is going. We're still correlated with that. We'll take a look at the CME gaps, our daily charts. Also, we'll look at our delta. A few things I want to point out there. So anyway, let's dive into this video.
Trade Genius.
Guys, really quickly, our May specials are running, and those are going to get you the $3.99 if you're interested in getting into the kind of the entry level there. Gets you into the room, gets you the ribbon indicator and our sniper indicator, and those are really good systems. They work on everything, and we give you a lesson that comes with this too. We'll give you a link to the lessons, multi-video, shorter videos, but a few of them that will give you a real good understanding of how to implement that system. And a lot of people are having a lot of good success with that, whether it's crypto, ETFs, or even trading the futures like we do in the VIP room. So I encourage you to check that out. All right, guys, let's dive into these charts. You know, on our gap chart here with Bitcoin, we obviously let's get back to the current. We gapped here over the weekend, last weekend, and came up and closed that gap really quickly. So that's done. There's a small gap here. People are talking about a gap down here. Thing about this gap you have to keep in mind is it's not a weekend gap, right? So when the markets close for the weekends, Bitcoin makes a big move. The futures markets reopen on Sunday night, and they have a gap in the chart, and it looks to fill. Now, this little gap is actually from when the future session closes daily for an hour. Okay, this is a 4-hour chart. So if we had gone to a 1-day chart, this gap would not be there. So gaps are more powerful, attract price more when it's the weekend gap and it's visible on the daily time frame. Okay, there's also a gap down lower in the 3000s, but again, it's similar to this where if you looked on a daily chart, there would be no gap. So just bear in mind that even though these 4-hour gaps are here, because these other bars are in the same day and the gap has basically touched inside that day's range, daily there is no gap. So those don't necessarily fill. Now, that being said, let's take a look at the daily chart. I do have our sniper indicator on here. Now, this is indicating a sell cycle is in rotation. Now, the way I look at these snipers on a daily chart, for example, is I look to see if the pivot low holds. So in other words, if it fires, the lows should hold. If they don't hold, and then the cycle has failed and may recharge for another cycle. I have the settings pretty tight on this, so if I were to loosen the settings, we'd have another signal, for example, in here. I have them kind of tight right now, so it's going to be a little more selective on what it qualifies as a cycle top. We do have one here. Now, again, that means that this most recent high at 10,061 should not break. If it does break, then that cycle is broken and we would resume higher. So right now, that's what I'm eyeballing. The high of this move, most recent move at 10,000, just over $10,000 is going to hold. And that means we rotate down. Now, most people were looking for a dump after halving. I don't know that we're going to necessarily see a big dump. Definitely a retest of the 200-day moving average on the daily down there near $8,000 is definitely doable. We could see more of a consolidation and downward chop and then balance out and then start that grind higher. That's typical for a post-halving cycle. But right now, odds are saying that we would see a cycle top. Some bearish price action. The technicals are basically saying that there could be some more pressure up, or that pressure has already been played out in this most recent up move here, closing that gap. Because typically when the stochastics are getting into this formation here, you have basically the slower stochastic maintains a level like this, and then the stochastic RSI will come up. You'll see that in the example here. Back here, I'll draw this brush here. See kind of that formation, and you get this snap back up. And we've already kind of had that before these even moved up, which is a little interesting. So I'm going to keep an eye on how this plays out in regards to that. So to me, it lends itself to being, we could see some chop like this, but I think the probabilities are we see a little bit of this action here. Big support, again, is going to be in this zone here around the 7,000 mark. But at some point, this is going to level out. We'll see how the technicals and the volume build up around that and then start to grind higher. Okay, so that's most likely what will happen in the days and weeks ahead of us now that we've gotten past through this halving cycle. What we may start seeing is some supply coming off from miner holdbacks when they're trying to offset their haircut in the mining income, start to see. So you get more of a supply side pressure into the market for a bit until that equilibrium plays out, and then we resume our post-halving run up. This is our delta chart. Okay, so this basically is looking at futures and the delta between the futures and the spot price, and run it through the indicator, and it kind of tells us when we should be looking for shorts and longs. So right now we've been in a long cycle. We would be basically, what it's telling us is that we should be buying the support here at the WMA 65 around 92.55, and that area has been holding as it should. The thing to keep in mind, though, is in this current cycle that we're in, whenever we've been approaching these higher areas above a 55 reading on the delta, it's been topping us out on Bitcoin, as noted with these circles. And then we just got that here on this run up there, up near $10,000, which also we have the daily cycle top on. So there's definitely a very bearish tone here in this area. And I think getting back down to the 4-hour 200 period moving average would probably reset these things cyclically. But again, that would be down there toward the 8,200 area. And again, on the daily, we talked about support down there in the 8,000 zone. So just keep that in mind going forward. I think the odds are more so that we go down and we do test that lower 8,000 area first before we grind higher. At least that's what the technicals are telling us. So that's kind of my bias going forward at this point. All right, and real quick on the S&P 500, because we've been correlating with it still, even though Bitcoin has outperformed the S&P 500 since the dump. But if you overlay the moves, when the S&P is up, Bitcoin is up. When the S&P is pulling back, Bitcoin is pulling back. Bitcoin actually will lead a little bit in terms of when the moves happen, but eventually they all catch up. So right now, what's happened is even though Bitcoin's grinded higher during this time frame and made a series of higher highs, it has moved up and down in this daily cycle with the S&P 500. The S&P 500 essentially is in this huge multi-day balance over 20 days now in this zone. In market terms, this is balance. So this next move out of it is going to be big, because this is going to either turn into major support or major resistance. And market being up here holding this zone is completely detached from the fundamentals, which is that the economy and the GDP are both just getting absolutely crushed right now due to the lockdown. So fundamentally, you would think odds are that we could drop down, but with the Fed backstopping everything, you have to be open that this could just do a move and buck the trend, buck history, and poke higher. So it's when you're playing with funny money, funny moves can happen. So just bear that in mind, and that would also help the price of Bitcoin as well. On the left over here, we have the price of oil. Oil's been leading the market. These candles here are the crude oil futures, and then this line is the S&P 500 essentially. So this oil has been kind of giving us heads up as far as moves down. When oil dropped severely, it started to move down, making lower lows and lower highs before the S&P 500 caught down to it. Now it's come down here, and the S&P 500 after that low basically kind of broke away from the oil woes, and oil's run back up here. Now, key for us here is going to be going into next week with the oil expiration to see if they do another one of these moves where you can have a lot of shenanigans between expirations, but expiration day means if you got oil futures and you're long oil, you're going to have to take delivery on those. So if you don't want to take delivery or you have nowhere to store them, you're going to be dumping oil contracts. And if that happens, it'll be interesting to see if that triggers a pullback on the S&P 500, which would in turn create some negative sell pressure on Bitcoin, which is already technically looking like it's in a cycle top. Okay, so there's kind of what's going on with the week ahead and things like that as far as the different dynamics that are in play with the price of Bitcoin, both technically and fundamentally with things going on in the world. So we will update this on Monday, see how things open up, and take a look at how price action has developed since the weekend, and give you guys another update then. All right, guys. Appreciate you guys watching our videos. Thanks so much. Stay safe out there. Be careful with that virus, and I'll see you in the next video. Take care.
Trade Genius.